You only need to focus on one 4-hour candle. This one specific 4-hour candle on Forex provides all the framework you need to pass any challenge on the internet. All you should do is trade the open, the high, the low, and the close, or open, low, high, close of this one 4-hour candle. This candle is on a specific time, and when it is set to expand, this will pass any funded account you need. What is this 4-hour candle, you may be asking? It is the 9 a.m. 4-hour candle on Forex pairs. If you take a look here, this is the 9 a.m. candle. Today, this expanded lower. Why did this expand lower today? From a 4-hour fair value gap. This was predetermined to go lower. So when the 4-hour 9 a.m. candle is predetermined to go lower, you have an open, you have a high, you have a low, and you have a close. All the framework you need to pass any funded challenge is within this one candle. Let's dive into this candle and look how you can capitalize on this. If you go to the 5-minute time frame, you can see here that we have a high, we have a low, and we have a market that's predetermined to go lower. So when we trade into a premium of this range from high to low, 50% eyeballing it is about there. This is a premium for value gap. You are now waiting for the 9 a.m. open. If I make this obvious with an orange line, this is the open of that candle. If you are looking for sells, you want an open to a high to be created, which is what? Your Judas swing. We want the open to high to be created, and then we want to see displacement. So, first step, open to high must be created. By the way, inverse anything I'm saying for a bullish 4-hour candle. Open to high must be created. Second step, we need to see displacement away from it. Displacement away from this confirms that the 4-hour candle of 9 a.m. is actually going to expand in one direction. This also usually presents as a market maker model. Original consolidation, we have accumulation phases, we have a smart mini reversal, and then we sell off. We have different distribution levels as we sell off lower. So, anything above this 9 a.m. candle here that we're going to make red, this red box is above that 4-hour candle's opening price. Anything above here is accumulating positions, which means what? People are longing above here as we get above old highs. Remember, breakout traders are longing. They're going long above there. They're going long above there as well. We know that this is manipulation. This is accumulation of positions. Right. So if the 4-hour candle is predetermined to go lower, this is accumulating positions. You are waiting for this to happen, which is displacement. We do not engage with a market that is not showing any signs of displacement. That is why you must wait for this to happen. Now, all of this, remember, is above the 9 a.m. opening price. We now trade lower. The secret to this 4-hour candle, a big secret behind this, is that price will gravitate back towards the open. Now, it doesn't have to hit it exactly because Forex is often less accurate than indices. But it can gravitate back up towards there, and that would be permissible. Meaning what? When we displace lower, we can even come back to that 9 a.m. price there. Then we can start to break lower. In today's case, we just rallied above what? A short-term swing high, inducing buyers again. Everything in a market that is determined to go lower, every run above a short-term high is manipulation. It is tricking traders. It is a trap. These are market traps that the algorithm is programmed to do so that markets trip you out. Any stop run after this displacement is a sell. So we run above the high, we sell off. We sell off from here as well on a retracement to this wick, 50% of the wick, aligning with the gap, institutional order flow entry drill. Now that's a lot of words, but the main focus is this is a candle that's predetermined to go lower. Okay, why? Remember the framework. Don't forget the framework. We ran above old highs back here into a key level. We displaced lower, rallied, high to low, OTE, and we broke lower. In that break lower, we created a 4-hour fair value gap. Now, all you're waiting for is that 9 a.m. candle. Just wait for that 9 a.m. candle, and you can trade an open, a high, a low, and a close. This happens so often on Forex pairs, you would be surprised, okay? This happens so much. Take a look here, this 9 a.m. candle. If we remove this and we focus on this 9 a.m. candle now. So what did the previous candle do? Well, we're in bullish order flow here. The previous candle traded lower, wicked higher, and came back inside the range. This is manipulation. So when we have a candle like that, you can ignore the big wicks here. That is news manipulation. Almost pretend as if the wicks are not there. That's important. Pretend as if the wicks are not there when they are that big, because it's all manipulation on the downside and the upside. So we ignore that. If you envisioned a market without these wicks here, this would still be bullish order flow. So what are you waiting for? The 9 a.m. candle. Where does that open up? Here. We then trade lower into where? Below this low here. We trade lower into 50% of the wicks, right? Which is what on a lower time frame? Order blocks. So we use and wait for that 9 a.m. Then we wait for what? Displacement. Where does the displacement come in here? Here. Fair value gap. Finally, we create a fair value gap. We wick into it and run away. Target the highs and protraction. So the old highs back here. But all of that came from that one 9 a.m. candle. You're only waiting for that. And when it is set to expand, because of what? Order flow, key levels, daily key levels, all of that. When that 9 a.m. candle is set to expand, that is when you make your money. That is when you pass your funded accounts. That is when you make money on your funded accounts. That is when you pass any prop firm challenge, just with an open, a low, a high, and a close. You can see we have a bearish example today, and we had a bullish example on Friday. So if you just skipped Monday, you would have 2 days out of 3 days where you had a 9 a.m. open, low, high close, or an open, high, low close. If we go to the 5-minute time frame, this is even more clear. Displacement here. Notice that is where the displacement happens. Now 9 a.m. does displace at this point. That gap also holds. 9 a.m. should open up, then create a Judas swing into a key level, and if we reject that key level with displacement and with the signatures of price that indicate we are willing to go higher, if that happens, you can get in on your fair value gaps on any of that. I will leave you guys to backtest this. This 9 a.m. candle is your everything. It's why I say you only need one candle. Oftentimes when I post in my Discord, this is what I'm looking at. This candle, this 1 4-hour candle is exactly what I'm looking at. This is exactly what I'm trading. This is exactly what I use to make money in these markets. And it's all you need as well. Just make sure it is in a premium or a discount. And that 4-hour candle is predetermined to expand based on key levels and liquidity. With that being said, I will leave you guys to digest that information. If you did enjoy this video, head to my top link in the description and you can learn from me there. It is my private mentorship where I trade every week and every day with you guys, giving you call outs, etc. If you do want to support me for free, please do drop a like on this video. It helps boost the algorithm and we will reach more traders and take their trading to a next level with this one candle theory. Leave a comment with any feedback if you have some. And I thank you as always for watching. I'll catch you guys in the next video.